And I think Paulina said a little bit earlier, it's funny, we speak about blockchain, we speak about fintech, we speak about instant payments, but when we make a cross-border transaction of $100,000, the money disappears for 2 weeks and then it resurfaces. So it's clear that the system is not working the way that we think it should. And I think that many of us in this room are believers in the continent and the potential that it holds, right? One of the areas that really limits us is this ease of money movements across the continent, right? And we're somewhat aware of the difficulties that the regional exchange controls have for us, and many of the other obstacles that limit us. But I think with challenge also comes opportunity, so that's why these bold individuals have joined me today to discuss these topics. So we'd love the panel to introduce themselves. I think, Cindy, we can start with you, a little bit about your role at MFS Africa, and then you, Sean, Monica, and then we'll get into some of the questions and discussions.
Great, thanks Grant. And thanks everyone. You know, when Jess said this morning her gratitude of being on the first panel, I was a bit envious. But I've had about 3 cups of coffee, so I think I'm okay at this point.
Good.
So to everyone in the room, I'm Cindy Sieberts, Country Director for MFS Africa, based in Johannesburg. Fairly new to the payments industry if you consider just 18 months. I think overall the payments industry is old in terms of legacy versus fintechs coming on board and mobile money coming into the fore, etc. So I think in my experience, I find 18 months is still young, and when I look around the room and people I've spoken to, it's an ever-evolving industry. So very excited to be on this panel and, you know, with experienced colleagues as well. At MFS, obviously, we're more focused on the mobile money aspect of things, and Johan on the previous fireside chat did a lot of coverage in terms of what we do and where our growth is and what the potential is on there. So I'm excited to talk about that.
Awesome. Thank you. Sean?
Yeah, good afternoon, everyone. My name's Sean Maloney. I'm the founder and current CEO of Sikhona Forex, which we were acquired last year by Euronet, particular division RIA.
Congrats.
Thank you. And we're pretty active in inbound, real-time inbound bank account credit with at least 7 of the top 10 brands, world brands. We act for them, and we also do outbound through the usual, we compete with the usual guys, Makuru, Hailapeza, etc. Thank you.
Awesome. Thanks, Sean.
Hello, everybody. Sorry for my voice. I had the flu last week, so I'm still recovering. So, my name is Monica Singer. I'm a chartered accountant. I'm also a professor at university, thank you. And my passion is to educate the world on blockchain technology. I joined Consensys, the biggest blockchain company in the world, 6 years ago. I represent them in Africa, and I work in Cape Town remotely. Previous to that, 25 years ago, I was asked to change the financial markets in South Africa. So my job was to take all the share certificates in the stock exchange and the checks and digitize them. So I created what is called the Central Securities Depository, straight, and I ran it for 20 years. And I changed the financial markets completely. And then one day in 2015, 2016, I read Satoshi Nakamoto's white paper on Bitcoin, and I realized that instead of centralizing, I should go and decentralize the financial markets. And I've been working towards that ever since. So I look forward to this conversation.
Yeah, so do I. And did you tell everyone it's Professor Monica Singer?
Professor.
Okay, fantastic. So our topic today is international money movement, crossing borders better, faster, and more efficiently. So what do you do when you're preparing for a panel like this? I think much to Kian's dismay, I went to Google and I typed in international money movement in South Africa. And what it actually did was told me about a process that was traditionally controlled by banks and the SWIFT system. And obviously a place where we sit now, this is largely, the space is largely played in with banks, fintechs, and other parties. And this is something that we want to dissect today, right? So I think coming to the first question, and coming to you, Cindy, Would love to get a sense and some of your picture of how cross-border payments in Africa have evolved over the past decade and what some of the key challenges that still persist in facilitating international money movement.
Yeah, so the evolution, I think I'm going to speak from a MFS perspective. Recently, our CEO told us a story of how MFS Africa started. He started off at MTN, rolling out the mobile money wallet, Momo, across 21 countries. And from there, he was like, okay, I've done this, what's the next step? Like, I have a vision here, like, not just Momo, but how do I create that interoperability across borders? And he had the vision of building a network of networks, basically, so building on top of that. And he started, obviously, with like 4 or 5 people, had a CTO who, actually traveled from South Africa to Ghana and Cote d'Ivoire with actual servers. So going to install them in MTN data centers in Accra and Abidjan. And that's where we started. And then from there, just building on and building on. And if you consider the mobile money network now, it took us 17 years to get to 800 million subscribers, and then only 5 years to get to the next 800 million. So that evolution is growing exponentially. I mean, the pandemic obviously helped with that in terms of digitizing, access to banks and physical presence of merchants, etc., was not available, and that speeded up the process as well. And having to get money across to your family in need immediately, the mobile money network has really taken off. And what we've seen post-pandemic is that has continued to stay and continue to grow. So I think it's very evident that digital ways is here to stay. And by partnering with people like Sikhona in terms of bank interoperability as well, money transfer operators across the globe, you're creating that network between borders. So at MFS, our vision is to make borders matter less, and how you do that quickly. The challenge, of course, is the real time. We do offer that real time instant payments. When you connect it into the banking network, it's a little bit difficult. They're still a little bit not 60 seconds or 30 seconds. It could be an hour, which we still consider real time. But with mobile money, you can achieve that in a minute, which is real time. And at the back of that, there's still the banking system. So, people always talk about, is mobile money replacing banking system? I don't think so. It's going to be at the heart and behind of that always. You're going to have cash backing that e-money. So that connection and collaboration has to continue into the future. I think some of the challenges that we faced is on the regulatory side, like licensing. You find in the EU, in the US, you can get one license that covers multiple countries, multiple states. Whereas in Africa, it's very fragmented. You've got to have a presence, expertise in each country, go through that process. It does pay off sometimes, and sometimes it's just a long, hard road that goes years and years without getting anywhere. But for example, with us in the DRC, we've persisted, opened up an office, have a country manager in there, and we're the only aggregator who can do international money transfers into the DRC, into mobile wallets. So it's that patience, that perseverance, but the challenge is there for sure.
Thanks. I know when you and I were chatting around this in preparation for this, we were speaking about Kian's famous saying, Africa is a very complicated country. And when we look at it, multiple countries, multiple different cultures, different ways of doing things, which makes business on the continent quite challenging, right? Sean, coming to you, I know Sikhona's focus, or at least the focus of Ria Sikhona transfers, has been in South Africa. What role do you see traditional financial institutions playing within cross-border payments as a whole, and how are they adapting to the changing landscape of international money transfers?
Okay, I presume by traditional you mean banks and maybe Western Union, MoneyGram, that kind of thing. Okay, so well, in this space, that's been very interesting. I think the pioneers in that were, so you had Western Union, you had MoneyGram, it was branch, bricks and mortar, very dominant. Western Union is still a very, very strong brand. And you had the sort of early disruptors, pretty much Makuru in the early days. And they found a way to bring it to the consumer that needed it. And that meant When you're transferring small amounts of money, it's actually important to the consumer that he doesn't have to use a taxi, because if it's only 1,000 Rand, he loses 20 Rand on the taxi on the way there, 20 Rand on the way back. His consumer in Zim or wherever else would have to also do a similar trip to go and fetch this stuff. Again, now you're going to probably lose something like 10% on top of the Western Union fee, another 10% kind of thing of the value of that transaction. So what happened was it was taken to the people, it was taken into the informal sector, the bridge was divided, the divide was bridged, and so there were just these ways of doing it on an app, paying in all sorts of different locations.
Yeah.
And that's been, significant, has made a big change, and the hours that you can operate now are also lengthening without having to have branches. You can get your funds, all hours of the day, 24/7. So that's the challenges the traditional banks and Western Union and MoneyGram have been facing, I think.
I think that it's interesting to see that digitization, right, of the MTO space, and how you move from like a very brick and mortar model that you spoke about to players like Mukuru, who were early on the continent that came into the space. I think I want to come back to you for maybe a two-part question, Cindy, because I'd love to understand from MFS Africa's perspective what the current cross-border payments landscape looks like on Africa as a whole. And for the most part, like how does money actually move across borders and to and from South Africa on the continent? And then the second piece around that is how does this compare to other markets across the world, both emerging and more developed markets? And ultimately, what does MFS Africa take from that from a lessons perspective?
Yeah, look, I think in terms of the cross-border aspect of things, it's being able to connect into various networks. So as I said at the beginning, we're trying to be a network of networks. So in terms of creating that accessibility for people like Ria, Helapesa, MoneyGram, whoever they may be, we've done all the hard work in terms of those API connections to over 250 partners that we work with. We're in 35 countries, so we've gone starting with those 2 servers in Ghana and Cote d'Ivoire, up to 35 countries. And so creating that hub, it makes it easy for people to then link up into these money transfer operators and reach multiple destinations with one access point. So that part, I think, is easy in a sense because we've done the hard work. And then you get the complications within that of the Forex conversion, who manages that? The competition it brings, because it's a very important part, like what you do from a send perspective to your receive person, like 5 cents on an exchange rate makes a huge difference in terms of what you receive on money. In terms of the international landscape, I think, we are lagging. I think there was a McKinsey report where it says only 5 to 7% of digital transactions in Africa, payment transactions is digital. Whereas if you look at countries like Turkey, it's about 40%. And I listened to a MasterCard podcast recently where they said, countries like Australia have 80% contactless payments. So there's definitely, I think, opportunities for us to grow within that digital space. And that comes about through those partnerships. So working with the banks, creating that open banking, working with other partners. So linking up that mobile money and banking environment, I think, is probably very key.
I want to change gears a little bit because we're speaking about more the conventional ways through reporting lines, actually operating through central banks or centralized finance. I want to come to you, Monica, and speak about more the DeFi approach, right? And how are innovative solutions like blockchain technology, stablecoin, cryptocurrencies, CBDCs, decentralized finance wallets actually playing a role in cross-border transactions, both from a consumer and business perspective? And I think additionally, just for everyone's benefit, if you could actually draw out some of the definitions of that, it'll just be helpful, Professor.
Okay, so let's start from the beginning. 2008, world financial crisis. That's the day the world changed. In October 2008, this white paper got issued by a pseudonymous called Satoshi Nakamoto, and I encourage everybody to read this white paper because that is the genesis of everything we're building. So it's meant to be a currency for the world. If you have a currency for the world, like that's your cross-border, no?
Yeah.
Not only currency for the world, it's meant to be without having to trust anyone. Not a central bank, not a bank, not anything. Sorry, everybody gets decimated in terms of that paper, if you think about it. But where did it fail is that cryptocurrencies became speculative. So even though people wanted, well, Satoshi wanted it to be a store of value and a unit of account, but it became so speculative that the price fluctuates. So if it fluctuates, you cannot use it as a unit of account. So what did the world do? Created the concept of stablecoins. What's a stablecoin? It's like a crypto, but it's collateralized. So you have stablecoins collateralized one-to-one to the dollar, one-to-one to gold, one-to-one to diamonds, to energy, collateralized against cryptocurrencies, and for that you need 150% of the cryptocurrency amount to collateralize the stablecoin. And then the stablecoins collateralized by an algorithm, which they have for now failed. But then I went to speak to the central banks. I don't know if you remember, in 2018, Facebook decided to issue their own stablecoin called Libra. And that put the cat amongst the pigeons. Why? Because imagine if 2.3 billion users of Facebook give up using the fiat currency, the dollar, the rand, the yen. Then what's going to happen to central banks' monetary policy, inflation targets, et cetera, et cetera? So until then, the central banks were saying, we don't want to get involved in this new world order. But when that happened, first they stopped Facebook by law, excuse me, and then they decided to start doing the research for central bank digital currencies. What's a CBDC? It will replace cash. It will be, what is fascinating about CBDCs, for me, is that it's issued by the central bank. For those that understand finance, you'll know that if it's money issued by the central bank doesn't fail. The central bank prints if they need more money, but it doesn't fail. Commercial banks fail. And we have something that it's, for me, a crime against humanity in the banking system, which is called fractional banking. And that's for another lecture, but I'm sure many of you understand what fractional banking is, which that is horrific. And that's why people like me, we do not trust the banking system any longer, because I'm old enough to have seen many bank failures. I'm an ex-auditor, and I can assure you that you can audit until the cows come home, and you can still not get to the bottom of corruption if there's collusion in the management of the bank. So what I'm saying is that all these currencies are coming in to replace the banking system because it has failed. And that's why we say, don't trust, verify. What is the verification we're talking about? We have a concept of smart contracts. Smart contracts is a functionality that says, if this happens, that happens. That, once it's in code, it cannot be changed. So do you understand, Grant, that we are building a new world order that completely doesn't need the existing payment rails because we don't believe in them? We are empowering the individual. The company I work for has got what is called MetaMask. MetaMask is a wallet. You download the wallet, and then you are your own bank. You can transfer money anywhere in the world. You can receive money from anywhere in the world. You can participate in the 1,700 DeFi protocols that exist today that are going to completely decimate traditional finance. You can take out loans. You can trade shares. You can buy insurance without asking permission. You go into the protocol and you do whatever you want. So can you see how we are empowering the individual to have access to financial products without having to use intermediaries, banks, service providers? And that's why I'm saying all of the conversations we're having in this conference, I'm surprised that nobody's realizing that there's a parallel universe that won't need SWIFT, won't need mainframes, won't need banks, because that's the world that we're building.
I mean, if I can just add in there, it's probably because it's still fairly new. What do you think is the timeline that people will start thinking about this becoming a replicant? Because, I mean, as you can see in this market, there's people involved in payments in the various parallel markets. So adoption is going to be very hard from that perspective.
I can assure you, as we speak, all of the banks, the big banks, are going to issue their own stable coins. Visa, MasterCard, already today the announcement, everyday announcement, follow me on LinkedIn, I share all the announcements. Today the announcement was MoneyGram is going to issue a stable coin using their current rails.
Yep.
Do you understand how everybody has to move to what is a stable coin? I haven't told you. It's a privately issued coin. It has massive risks. It's like M-Pesa. M-Pesa relies on, Vodafone or whatever to back the money. It's not a central bank issued currency. So there's going to be choices, many stable coins, and they're going to all integrate. That's the most beautiful thing about this technology. Because it's open source, integration is super seamless. And therefore, you're going to have a choice of which coin you're going to use depending on the risk appetite that you have. But ultimately, when the central bank issues the CBDCs, everybody will learn how to use these wallets and interact with a digital world that is cross-border, and it's coming. I promise you, this is happening as we speak.
I'm really excited to dive into this in a little bit, because I think that we'll cover a couple of themes here, right? And just looking at it generally, like understanding the lay of the land, the landscape. We want to dive into some consumer use cases, understand those business use cases across both more centralized as well as decentralized channels. And then actually look at what the future may hold, right? And if we're thinking about the consumer use cases and specifically what the journey looks like, Sean, could you give a quick picture of what the customer journey looks like and how you feel this payments experience could be improved, and specifically referring to the work that needs to be done from a partnership perspective or collaboration perspective within the South African or African markets?
I think for this audience, I mean, I can answer that. I think probably I don't think there's anything new to add there. I think it is getting easier. The technology is enabling it. It's getting more convenient in terms of where you shop. You can do more things and so on. I think that's all happening. But I think possibly this audience, we should steer more down this road. I think this is kind of interesting. I think personally I was going to have a beer with you afterwards, but I think I'm going to have to go back to the office and just look at where this is all going. Otherwise, we might not have a business. But if you want to steer it back that
Rethink
way.
our strategies.
Are we going to be out of jobs soon?
Okay, if we look at the B2B space then, right, because I think you mentioned a little bit earlier, a lot of the consumer journeys now, when we compare branch visits to actually accessing these specific channels via applications, like Sikhona has a mobile app where you're able to upload funds and send these funds. This is obviously within a centralized view. If we're looking at the B2B space, right, and speaking in the context of working through the Reserve Bank, and I do want to come to you for the next question, Monica, but Cindy, coming to you on this one, what are some of the use cases for businesses, and how can we improve some of those processes and make money movement more accessible for businesses? Right, and really speaking to some of the challenges and obstacles, because I think we saw by a show of hands that the B2B use case for cross-border funds is something that isn't frequently used, and that's because some of the challenges that we have locally around that. But I would love to understand the use cases, challenges that you see.
Yeah, look, I think the e-commerce sector is massive, as we know. I was at a conference recently and they showed us some stats, and I think Johan mentioned in the last panel about his daughter using Shein, and everyone knows Shein, but maybe you don't know what the stats are. So from South Africa to China, on a daily basis is 25,000 transactions a day, totaling $75 million a month. That e-commerce sector is massive. I mean, I'm sure all the ladies in here have bought from Shein at least one time in their lives. I know how I have. But in terms of facilitating the B2B, I think where MFS Africa, we kind of try and work with that is by facilitating collections, disbursements within our enterprise solution. So we will connect up to the merchant, for someone to like a Spotify or a Netflix, and enable them to collect a subscription from a consumer through their mobile money wallet. So they have that access within there. But expanding on that further is, linking up the MasterCard rails, the Visa rails. Not all of these customers with mobile wallets has access to the actual banking system. 45% of Africa is unbanked, and so this is why mobile money has taken off that much in Africa, versus South Africa, which is 85% banked, and that's why it's a bit slower here. But linking up cards to wallets, so now you can, whatever money is in your mobile wallet, you can have on a Visa or MasterCard rail and participate in the ecosystem of e-commerce. So that's bringing in financial inclusion on a bigger level. So you're expanding that reach within the market now. And I think that's very important. Challenges, I think, is just education is in terms of reach of these people. So this is a new kind of place that we're playing in terms of collections and having people get the understanding of, okay, you can, mobile money is a real transactional currency, basically. It's backed by cash somewhere. You can go and cash it out if you need to. So the education aspect, I think, of it is important. And then just affordability for people to have access to a mobile smartphone, basically. So from that perspective. But B2B, I think, is definitely something that we want to understand more as well and see how that can grow, because commerce is a massive part of the payments industry.
I think B2B has been a large challenge. Many of the conversations that I've had with merchants that want to come to South Africa, or merchants that operate here that have operations elsewhere or a head office elsewhere. This is one piece where people really pull their hair out, right? And it, at times, I think leads people to look at alternative methods. And Monica, coming to you on this one, right? Because if we're thinking about stablecoin, the like, how can people or businesses, B2B use cases specifically, leverage these technologies to streamline their cross-border payment operations or the need to send and receive payments across different markets?
So I give you an example. MetaMask, the wallet that we have created, we have now created the ability for any business to take their wallet and modify the wallet for your needs. So not only white label, but you can add functionality, you can decide. So you already have a wallet that has got cross-border anywhere in the world using blockchain technology that you can take, modify it, and use it. We earn money by you using the wallet, so we give it out for free.
So transaction-based model.
Yeah.
And maybe to expand on this, because I really want to be explicit around this. If I have a MetaMask wallet in South Africa, you're sitting in London, or Montevideo in Uruguay, and you have your MetaMask wallet, what is the amount of time that we could expect for a transaction to take place if I'm sending you funds or you sending me funds?
It's instant.
Okay.
It uses the Ethereum network. Bitcoin takes 10 minutes, but Ethereum uses a cryptography called proof of stake, and that's instant.
Okay. So we definitely see that through the system and way of operating, there's some opportunities. Now, when we come back into what would be considered the more reporting, regulated space, right, Sean? Would love to understand from you and your perspective, given some of the technologies that exist out there, some of the ways that fintechs operate, how should banks and fintechs work together to make it easier to make money movement more accessible?
Yeah, so I think I'm going to sort of lean a little bit into Monica on this one. I think what, new technologies must obviously be embraced by us. We must try and understand them. We must try and use them for our own benefit to make journeys more efficient, cheaper. That's the challenge, and that's the excitement of the space. And I think where Monica is, we're in a it's all possible. It's all quite theoretical, but it's all possible. And I think the challenge is, how do we, as industry participants, banks, fintechs, and so on, how do we kind of get that, use it to our benefit, to also benefit our clients? How do we educate the client to use it? Because there's always a trust element in this whole thing. I mean, we still do, we do this inbound cash product. So typically you would have to go to a branch to go and collect your cash from your relative. A lot of those customers are migrants as well, and language issues and so on. So not all, one size doesn't fit all. So it's a completely digital experience. You get a message, you've got money from X brand, the name of the person that sent it to, the amount and so on. You get that message, you follow a little link and a journey, and you should just be able to go to the ATM and get your money. But 90% of all the walk-ins we have, which we try not to encourage, but we have a lot of walk-ins, it's that problem. So that person needs the hand held to get them to be familiar with this new shop, this new way of doing things. So I think that is kind of what we need to be aware. We need to be aware of these changes. We need to have our eyes wide open and see how they can benefit, move quickly. But we also have client base, so it should be easier for us to make these new technologies work within that space.
Yeah, it's interesting. I actually want to double click on that, because if we're thinking about the B2B use case, right? Africa, largely as a continent, has been considered the last global frontier. And this is the place where a lot of global brands want to come and ply their trade. They could be listed entities in other markets, and there's certain protocol that they have to abide by when they are sending funds back to their home market. And that repatriation of funds needs to go through official channels. There needs to be specific reporting around it. What do you think are ways that fintechs and banks could work together through that process, right? Because I think, speaking with you previously, you mentioned there's like 20 different there's 20 different BOP codes we're able to report on as individuals. Banks have access to more. Like, how could we make this process a little bit more seamless, a little bit more open, right, to merchants?
Yeah. So I think the earlier speaker that I sat through was Johan. The regulator actually isn't kind of the enemy here. They do have sandboxes. There's a really interesting one going on now, which will give, okay, so remember, we're AD with the limited authority. We have the 20-odd BOP codes or whatever. The banks have...
Just for the benefit of everyone, AD, authorized dealer.
LA limited authority, so therefore only these BOP codes. The banks have around about 1,000 BOP codes. I don't know, that's a lot. Covering all sorts of aspects: insurance, unit trusts, dividends, tons of things for reasons why money moves. But I think I've actually lost my train of thought. Why did you interrupt, Grant? What were you saying?
It was around BOP reporting, the different BOP reporting codes that banks have versus fintechs, and how we can make this process a little bit more seamless, a little bit more open for us to send funds cross-border via official channels.
Yeah. So I think in terms of where, so what's happened with the banks in terms of what the problem you were mentioning, which is like, how do we make Shein? There's quite a lot of these brands have come into SA and they've ended up with tons of rand, and they can't get it out. So that's the issue. But facts are, we have a legal requirement here. We have a thing, BOP means balance of payments. Things have to balance. So if all of those transactions to Shein had actually been reported as they were done, in other words, bulk reported to the regulator, then those funds would have no problem to leave again. So it's a kind of engagement with regulator. It's kind of understanding the system you're working in. And I think also, Johan mentioned earlier, you shouldn't, I've watched the space and I've watched, the technologies that are being developed and you speak about. But have an eye on the regulator, because you're wasting your time thinking that's not going to happen.
Yeah.
Facebook thought it wasn't going to happen. They're quite a lot bigger than most fintech startups. It didn't happen for them. The regulators came after them. So play it with the regulator, but use the technology. It's clever.
Understand the system that you operate within. I think it's such an interesting one, right? Because you hear these horror stories about exchange controls. I think I heard one of the airlines in Nigeria had $50 million that they could not move out of the market because of some of the exchange controls. And I guess the primary role of the Reserve Bank within this is to actually just track the inflows and outflows of funds to the country. It's a really big accounting system. But Monica, I want to actually speak to some of the regulatory challenges, right? Because I think regulatory challenges are one piece that limits the adoption and growth of the market that you work in and play in, right? So if we could speak through that and maybe help us break it apart, but what some of those regulatory challenges are that need to be overcome, and what essentially needs to play more of a key role in easing this money movement across the globe. And then, indulge me if you will, is there a chance that there could be a central bank-backed digital currency, and do you think that this is possible? I know you spoke lightly to it a little bit earlier.
So first, regulation, it's a challenge, and the main thing we need to do is to do KYC and prevent anti-money laundering. So that is really, we need to do that, because this system can be abused, because just remember, the individual is empowered to do whatever they want. The great news is that the blockchain technology has got the complete audit trail, and it's absolutely transparent. You cannot see the books of the bank, but you can see the ledger of Bitcoin, of Ethereum. Every transaction, you can see it in real time. So we are saying to the regulators that they have to work with the technology, not try to squash it. Yeah. Because the technology, by being decentralized, by having the provenance, by having smart contracts, it already has inbuilt audit procedures that are going to protect the public and give an additional tool to the regulators to track. There's a company called Chain Analysis, for example, that are able to track exactly how that money has been used for
across the blockchain.
Yeah, for illegal means. You cannot do that with cash, and you cannot do that really in the banking system that has been aiding money laundering for, forever more, because they haven't got the ability to really control this. But with blockchain, you can. So what I'm saying is, don't throw the baby with the bathwater. Use the technology, and yes, put additional controls like KYC, AML, and so forth. And then you asked me another question. CBDCs. CBDCs are coming. Why? Because there is such a massive proliferation of crypto and stablecoins that the central banks are feeling completely threatened by the fact that they won't be able to set monetary policy. You're not going to use the rand in the future. You're going to use some other currency that gives you this functionality. So watch the space. The only challenge, I work with the Nigerian central bank, and I said to, they implemented the e-Naira, and it failed. Why? Because instead of creating a CBDC similar to Bitcoin, they went and created a CBDC that doesn't respect privacy. Do you want the central bank to know every time you go gambling or buying alcohol or in a prostitution, whatever? No, that has nothing to do with the central bank having to monitor what you do, which is what happens in China. China is a social system. You get points. They control exactly what you do with your money. That was not the intention when we created Bitcoin. It was really the intention that you should be able to be free to do what you want.
Shouldn't it be anonymous, right? I want to pull on the one thread that you mentioned, and that was around the need for KYC verification, because obviously these are important elements when essentially placing more trust in the space, right? Especially, you need to know who is in the system that you're working in. Which is funny because cryptocurrency is all supposed to be anonymous. But where do you think that onus sits Does that sit on merchants? Like, who should actually be driving this, this adoption? Who should be enforcing the KYC? Should this be regulation that's passed locally?
I really think that the best model is what is called the two-tier approach, which we have that in the financial markets. The central securities depository keeps the ledger, but the CSD doesn't know who's buying and selling. That is known by the broker, the financial advisor, the banks. So 2 tiers, okay? The central bank should have the ledger of the central bank digital currency, but should not see what the transactions are taking place and should allow the service provider, here comes the opportunity for service providers to keep the ledger of their clients and keep privacy. Normally $10,000, up to $10,000, you know, it's in America, you don't have to disclose what you're doing with the money. But after that, you have to disclose because, as I said, we need to still protect the world for anti-money laundering. But the two-tier approach, I think, would be better in terms of preserving the privacy of these transactions.
Sure. I'd actually like to, just on a point that you mentioned on that, around the, you spoke a little bit about the way that the banking system versus cryptocurrency and the blockchain, through use of tools like chain analysis, you're able to actually track the movement of funds and money. I'd actually like to get more of a centralized opinion on that, right? Because Sean, Cindy, you obviously operate in very much the regulated space where this isn't so much an effect, and I think, having spoken to many different people on both sides of the bridge, there's definitely this this opinion on the crypto side. What's this opinion on the fiat currency side? Is this at parity with the truth? Do we think that fiat currencies actually create situations for money laundering? Because I've heard mixed opinions on it and would love to get yours.
I mean, I think, as Monica says, it's also the opportunity within the crypto side for money laundering to happen. So it's not exclusive to the fiat side. There is that possibility there. So maybe the risk is a little bit higher on the fiat side, and just having those checks in places is more costly. So maybe, you know, the blockchain becomes a little bit more cost effective. So even though you have the same risk, it's a little bit more cost effective to manage that. You know, from a mobile money perspective, also you've got to do those KYC checks, but you still run those risks, and we do have those instances where you've got to stop transactions or blacklist numbers, etc. But it comes at, you know, how do you kind of keep on improving that process that you can pick it up sooner and limit that number of being higher and higher. So it's definitely an interesting conversation, I guess. And I think from the blockchain perspective, for me personally, I'd love to understand more from Monica as well. You know, how does that fit in within the merchant space? And, you know, if I want to, you know, go and buy something or pay for my Uber ride, is Uber going to be on the blockchain? And then my wallet is linked to that. It's just, I think the whole evolution is going to take years. But adoption is very interesting on that front, and the risk aspect is going to be very interesting to monitor as well.
Can I just say one thing? I worked in traditional finance for my whole life before I joined blockchain, and the one thing we could not achieve integration and interoperability. So one stock exchange cannot be connected to the other stock exchange. One CSD cannot be connected to another CSD. Why? We use this antiquated mainframe system with Swift messages, and the messages in every entity is different. So to try to integrate them, it's impossible. In the decentralized finance world, every protocol, it's completely open source, interoperable. The code is not hidden in a safe. The code is open for you to take. You can steal the code if you want to, and you can modify it and you can integrate it. So you can take a protocol that does, let's say, trading, and a protocol that does lending, and you can create a new protocol that you stole from the DeFi protocol because it's open source. So, and not only that, I was telling Sean about this new concept. It's called decentralized autonomous organization. is going to replace, for the lawyers, it's going to replace the legal entity,
Is that a DAO?
the DAO, which won't have board members, shareholders, filing cabinets, a building, nothing. What's a DAO? It's a smart contract. And you go in, you don't have to ask permission, you can trade, you can lend, you can buy, you can create insurance, you can do whatever you want, replacing traditional finance. So that's where the world is going. So just bear that in mind when you think about anything that is centralized, the world is moving to decentralization.
And how does it work with the cross-border aspect and, currency exchange rates? Because, in the world we're in at the moment.
So it's the internet. Just picture this. This is the internet. No mainframes, no silos, not your own little ledger. It's the internet. One ledger for the world. And we have what is called oracles. And the oracles feed the market price of whatever you want, exchange rates, share pricing, anything. There's a company called Kraken, which is one of the first exchanges in the world, cryptocurrencies. They now announced they're going to start trading shares. Shares. Why? Because tokenization of shares is a no-brainer use case. But because the stock exchanges are so powerful, I come from there, 20 years at the JSE, they will die before they will allow anybody to usurp on their domain. But when I left straight, there were 650 listed companies on the JSE. Do you know how many listed companies are today? Less than 350. And more are delisting. And that's not the JSE, that's around the world. Who wants to list on a stock exchange when you can go into Uniswap, which is a DeFi protocol, you put your tokens there, and anybody in the world, not the JSE with all the silos and walled gardens.
The constraints, the regulation around local investment, foreign investors who can actually hold shares.
But you go to Uniswap, it's a smart contract, you can trade and swap whatever you want. Yes, at this stage you have to trust that the code has been audited because many of these codes have got a lot of bugs. But that is part of the evolution of this new technology. But you understand the freedom that I'm talking about here?
There's definitely not as many constraints. And I want to be respectful of Sizwe because he'll kill me if I keep speaking. Because we want to actually open it up for some questions from the audience. So we'll take some Q&A for the next 10 minutes. And then we'll wrap up the panel.
Hi, Tabiso from Nedbank. Question for Cindy. Just on the scaling of mobile wallets and making them more interoperable across the continent, what would your take be on increasing the security around that? Because essentially you are kind of creating your own little bit of an exchange. So cyber risk in terms of people coming in and creating their own currency in this mobile wallet and being able to transact around this closed loop ecosystem is just a concern I'm kind of picking up around. Whilst you want to scale mobile wallets, what would be your security and controls aspect that you'd look around that? It sounds like blockchain sounds like a very good aspect, but would be interested to hear your point.
Yeah, I think, in terms of remittances, that's a very big part of the value chain and where that comes in and monitoring. So from us as a technology provider, we're not the license holder in terms of that process. But what we do require from our partners, so we are B2B, each end has to have that monitoring in place and KYC checks, etc. We have that internally as well, so there is a three-step process. But at the start, there's a KYC check, a check of a name versus that mobile wallet and that matching. And then we do monitoring in terms of transaction numbers, does it seem out of the ordinary, etc. And then at the recipient side as well, that MNO, that telco will do that on that side. So as you scale, you just have to ensure that those processes become more robust and more detailed. And I think it's just investment into those processes to ensure that they, go to more detail in terms of making sure that those checks are in place. maybe AI can help within that. Maybe mobile money somehow can sit on top of blockchain eventually, who knows? And then you have that transparency as well. So there's, I think, opportunities throughout the evolution of it.
And then to the front, KG had a hand up.
This one's for Monica. So I have crypto, and it's like getting onto it is great, and then I always have to get an off-ramp, right, so that I can actually spend it in the real world. I'm wondering what's your viewpoint on like actually being able to stay in the blockchain world and buying houses, cars, that kind of thing. Like, where do you think that is? How long do you think that's going to take?
If you follow me, you will see that I publish all the countries that are coming up with the solutions. The latest one, I think, is Israel, that is putting in the blockchain all the property transactions. Because as you know, in South Africa, FNB announced that they're going to put their own mortgages, and because they keep the title deeds until the mortgage is paid, they're going to put the title deeds in the blockchain. Because remember, one of the key problems in Africa is that people go into those title deeds and they fraudulently change them. I went for the registrar of title deeds when I was still the CEO of Straight, and I said, I'll help you to dematerialize, to create, instead of title deeds by a digital record, of title deeds in a central securities depository. And she, after an hour of her ignoring me in my presentation, she says, I'm busy microfishing the title deeds. I wanted to commit suicide there and then. Microfishing. I bet you most of you have never heard of microfishing. It's the most antiquated system you've ever heard, and that's where we are in South Africa. When there was COVID, the title deed office had to be closed down. Closed down because there was no access to the register. Really, don't get me started. So no, really, no. I can tell you stories. The point is, this is a technology that you think nothing's happened, and one day you open the newspaper or read, your tweets, and you're going to say, what happened? Where was I? So I'm saying to all of you, don't sleep, start reading, start learning. We're working on all these projects as we speak.
Thank you, Monica. I'm going to take one last question.
So I feel like I'm asking about an old payment rail now, but PayShop. Looking at what Singapore's done with their Pay Now and integrating with India's UPI to make cross-border payments cheaper and obviously real-time, is there any view on what we're going to do with PayShop in that space? Are we also going to follow along on those routes? Because I think Singapore's done it with Thailand as well and is working with Malaysia now. It's fairly new and recent, but that is a solution to cross-border payments right there.
I can pick it up. So PayShop, what's that going to do for us? It's going to make it easier and quicker to get paid. That's from a remittance business point of view. To get it to happen internationally, is that what you're asking? Yeah, so currently it is pretty much real time anyway. So we were thinking of running a kind of competition down our network and saying, you can even match fix it if you want, but go have your brother standing in the queue in Nigeria, wherever it may be, pay now, how long does it take to collect? And it can literally be, less than a minute in this world. So what happened with PayShop is it was needed here. So the banks could do kind of everything else, and I think that's my reason why mobile money hasn't worked here. We didn't need it. You heard the 8 or 9 POS devices. The ATM was the same. They had 50 different banks in Kenya. You had to go to that bank's ATM. So there was no bank serve linking it all up. So the only thing we're missing, in terms of functionality is literally that, is this instant payment to friends. And to avoid cash in transactions, is Gumtree still around? Those kind of transactions. So to avoid cash, PayShop it. So I think it's a wonderful product, and I hope it does take off here, and it'll save us money, on the payment costs.
To add on there, in terms of cross-border, if they want to expand into that, there is that possibility. I think they're also working on a cross-border rails, the TCIB aspect of it, which is very similar to what we do in terms of the cross-border, and we have that network. So maybe where the opportunity is linking up to the mobile money distribution network, which I think we heard Mo say from MasterCard is one of the biggest distribution networks. So PayShap is currently serving those people who are familiar with the banking system within South Africa. Do they want to then just target those customers to be able to achieve those wallets or reach those wallets of their friends, family, cross-border? I think it's possible.
We're going to take any more questions?
Any more questions? I'll take one more. If not,
We can wrap up here. Please, audience, join me in giving Cindy, Sean, and Monica a hand. As South Africa's best moderator, I'm going to hand it back over to Caesar.
from best moderator to best MC, eh? You're supposed to laugh. All right, that's it, folks. Thank you. Just a few, sorry. That brings the end to the second Stitch Scale Summit. We will see you all next year. Just a few shout outs to MFS Africa once again for supporting us and sponsoring us up to this event. MasterCard, if you're still in the building, thank you very much. We would have not been here today if it wasn't for you guys. I think another huge round of applause for the team at Stitch. I'm not going to name everyone, but they know who they are. They've played a major role in getting here today. So yeah, let's give it up for them. And then just lastly, I think a big thank you to everyone who actually came to our happy hour last night. Something that is new to me, having a happy hour before a conference, and I know I was speaking to some of my colleagues that it actually worked out quite well for this event. We walked in with a bit of a sense of networking and understanding and knowing each other, so that's great. And then just lastly, an apology for myself if I have butchered anyone's name today. The bar upstairs is still open, so please come approach me and I will buy you a drink. Thank you and good afternoon.